Let's talk about jumbo loans for just a minute and what exactly is a jumbo loan. Well, obviously, by the name, you would know that this is a larger loan amount, maybe than a normal loan amount. But what exactly is that amount where you cross the line into jumbo territory? So, when you talk about mortgages, and in this video, we're not going to be talking about any of the government loan programs like FHA, USDA, or VA. Those all have their own loan limits. We're just talking about conventional loans. And when we talk about a conventional loan, generally we're talking about a loan where the investor on that is going to be either Fannie Mae or Freddie Mac. You've heard of those two kind of quasi government agencies. So they are the investor on the vast majority of mortgages in the United States. And as such, they set the underwriting guidelines for these. So they have very uniform underwriting guidelines across all lenders throughout our country on all these loans that they're going to invest in. And one of those guidelines is they have a set amount where they say we will not invest in any loan amounts greater than this. And they change it, or they can change it every year. So based on market conditions for this year, 2022, they've raised that conforming loan amount to $647,200, $647,200. We spent many years at a 417 loan amount, so they've raised that again to kind of keep up with what's going on in the market. So what does this mean to you? Well, it means if your loan amount is $647,200 or less, then you're going to be in a conventional conforming loan amount, and the loan guidelines and the underwriting will be the same as any other conventional loan. If you're over that, so 647,201 loan amount will not fit with a conventional conforming loan through Fannie Mae and Freddie Mac. That means now it's considered a jumbo or a non-conforming loan. And there are still some investors out there for those. They're just not Fannie Mae and Freddie Mac. So what you're going to find is you're going to find some different underwriting guidelines. There's not going to be the uniformity there in the underwriting guidelines that you're going to have on conventional conforming. And as a general rule, the underwriting is going to be stricter for these loans because there's not as many of them. There's not as many investors. So generally what you're going to see is higher credit score requirements, higher down payment requirements. Most of these programs are going to require you to have some reserves. That means they want you to have some money left over after closing to make some payments if something goes wrong. Probably lower debt to income ratio requirements, things like that. So again, being in a jumbo loan amount, not a bad thing necessarily. Just be aware that the underwriting guidelines will not be as uniform, and they're going to be a little bit stricter than they would be on a conventional loan. Hope that's helpful to you. If you have specific questions around conforming loan amounts or jumbo loan amounts, feel free to reach out. I'd be glad to help you in any way I can. Thanks for watching. We'll see you soon.